Hey everybody, Matt here with Down to Trade. I'm here with Varian Croft, of course, and we're here to bring you our edition of the Week in Review. Let's go ahead and get started. Varian, glad to have you here.
Yeah, excited, man.
Absolutely, it's been a fun year so far, man.
Oh yeah,
Um,
it's been fun.
Without question, it's been a little bit of a ride. Obviously, we've seen some major changes from in 2024 so far in 2024 we've seen big differences relative to how the market was behaving in the beginning of 2023 without question, right?
Oh yeah, for sure, man. It's definitely it's part of that fun part about trading that we're always doing is you've got to adjust to the current market conditions. You can't stay
Absolutely.
stagnant.
Absolutely. And that's why we pay ourselves, right? That's as traders, that's part of our job. It's what we're here for, is to continue, like you said, continuously adjust to however the market is behaving at that time, not always being stuck on your previous strategy. Your previous strategy won't always work, right? And that's something that we discuss in the rooms quite often. So
Yeah.
now obviously in the day trade room, we've seen some big changes this year, and we've certainly made some quite a few adjustments to our strategy in the day trade room. For instance, we are now utilizing a an iron butterfly strategy quite often, and we utilize a debit spread to hedge it, and it's been working fantastic. In fact, this week, nothing but green all week long. Today was a little bit of a wash, with
Yeah.
the implied volatility. Today was our only day that we did not meet our goal. The 4-week bill auction coming out at 11:30, I decided to go ahead and exit my initial iron fly. And with the behavior that we saw this morning in the expected move in implied volatility, that just decided to stay out of it. So, but other than that, other than today, it's been a fantastic week. Everyone's been doing great across the board in the room. And I know in the swing trade room, you guys are killing it too, right?
Oh yeah, man. This year has been awesome so far. I mean, it's not, like some of past years, how just amazing swing trade environment. It's just not there like it used to be because of
Right.
the
Oh,
market
absolutely.
conditions. So we've really had to adapt and change, just like you did in the day trade room to the swing trade room. But with these new adaptations that we've done, I mean, we're sitting at an 85% win rate right now.
Yep.
We've actually only lost on one trade this year so far in the swing
Right.
trade room. Right now, we're sitting in Celsius, which is just looking great.
Yes. we're
We
almost
should be
we're
hitting
almost
profit
took profit
soon.
today.
Yeah, yeah, we were close. We were
Yeah.
close. But I mean, hey, another day or so, we should
Yeah.
be out of Celsius for a win. And we just set up a new trade on Tesla today
Yep.
because it just had such a nice pattern that it looks, going on that, and we're not going for those big winners. These are all
Right.
base hits. Everything we're doing is the base hits, getting that consistency out there. So that way we can, just keep those wins coming in,
Well, in
and
this market,
eventually
that's how you stay profitable.
yeah, that's what you got to do.
Yeah.
Eventually, we'll get some of those really killer trades out there that we can set up for bigger winners. But I mean,
Right.
that's not the environment we're in right now. So we got to
Correct.
trade the environment we have.
Correct. So what I do really like, so for those of you who have actually seen we did a free trial for quite a while with the swing trade room. And at that time, Varian was only teaching us one strategy. That our thought process was teach one strategy at a time, get everyone in the room really, really used to that strategy. So they're very comfortable and confident with that strategy. And then Varian comes and introduces the next strategy. And right now, he has a couple strategies that are working fantastic.
I've got a few ideas that I'm
Okay.
back testing, looking for. But I mean, there's like the big one is the newest one that we actually incorporated 2 weeks ago, which is our weekly SPX trades,
Right.
which wasn't a normal part of our arsenal. We were more standard, longer term credit and debit spreads going out,
Hmm.
45 to 60 days. But just because of what's been going on, those have been less and less effective, and the good setups just aren't coming like they used to.
Right. I mean, the ones
So
that you get into are working great.
yeah,
It's just that they don't happen very often. That's right.
yeah. Yeah, and that's exactly it. So with how much time is going between trades, really wanted to find something we can do on a more consistent basis.
Right.
And that's when where we started trading this weekly SPX that we're doing that week, that Friday's expirations. And based on all back testing, we're sitting at a roughly 80% win rate on this strategy.
Hmm.
So it's been really exciting getting out there and actually incorporating it to start. So
I love it. Absolutely love it. And now, at the end of every video, we are going to Varian's actually going to introduce a back test that he thinks is interesting and that he thinks could be beneficial. So that's something that's going to be the perhaps the last segment of our videos that we do here. So I'm really excited to get to that. But before we do, we actually wanted to get into the main discussion, or main topic for this discussion, and that's the 5 biggest mistakes that we think new options traders make. Now, you can probably name, 10, 15, 20 mistakes, but we're trying to narrow in on the five what we think are the 5 biggest mistakes that we see options traders make. So Varian, are you ready to go?
yeah, let's do it, man.
All right, buddy. Now, so let's just jump right in the first one. So the first one that I have written down is not having a clear set of rules. So now, I think of a clear set of rules as having a roadmap, and having a roadmap is essentially it's like trying to drive without a map or a GPS. You can go in a direction, but that doesn't mean you're going to get anywhere. And I feel like not having a clear set of rules can be extremely detrimental, especially to newer traders. We often talk about the idea of making a plan and executing that plan. Just making a plan isn't as beneficial as executing that plan. Without execution, making a plan doesn't mean a whole lot. But having those clear set of rules to help you make the plan, that's a very very important first step. And I personally feel that having a plan for management is such an important aspect of that clear set of rules. Would you agree?
Oh man, absolutely. And like I know we're calling this, top mistakes of options trading, but I think this is just a trading mistake.
Correct.
Anybody
Yep.
involved in trading the market, if you don't have a clear definitive set of rules, how are you supposed to track? How are you supposed to know if
Right.
what you're doing is working? I think so many traders get caught in this loop of looking for the holy grail.
Hmm.
We're all on the hunt for the holy grail, and you'll come up with a trading strategy. You'll jump out there, you'll do it. It works, like 3 or 4 times. Oh, this is amazing. I found it. This is the holy grail. And then you lose.
Right.
And then everybody will, so many people will turn around and go look for a new strategy because they lost once or they lost twice.
Yes.
And if you're not following the same set of rules, for one, you can't even properly compare them.
Hmm.
But then on top of it, if you're not laying out a data set of 20, 30, 40 trades, and I'm not saying live with cash, but at least back trading with this
Yes.
data set, I mean, how do you know if a strategy really works if you don't have 40, 50, or even 100 trades under your belt of that strategy?
It's so true. You just don't have a large enough sample size
Yeah,
to conduct any type of long-term analysis on it. You're never going to have a clear answer of whether or not that strategy is worthwhile, or whether the problem is your consistency. And we talk about being consistent a lot, because being consistent as traders is such a key element. And in order to
yeah,
be consistent, you have to be both patient and disciplined. So
yeah,
those 3 legs, we talk about patience and discipline constantly, but uh, both of those legs are extremely necessary in order to be consistent. And like you said, if you're testing a strategy, or if you're looking to analyze whether a strategy is working or not, and you're not consistent in your trading, then the entire analysis is bogus. It's a dud.
yeah.
So
If you're
just
if you're
being
changing it
consistent is
every
key.
week, you
Yeah,
know,
it's
how,
true. It's
how do you
true.
know? And so,
Yep,
yeah, I mean, those rules are going to be what creates your consistency in the market. And that's the only
absolutely,
way we can truly be successful as traders is to
absolutely.
be consistent in what we do.
Yes, absolutely. Now, this might seem counter to what we were talking about before. When it comes to understanding that we also have to be flexible in our strategy, but when
Yeah.
we're testing a specific strategy, we have to take into account how the market is behaving during that test period. If the market is being very erratic with the implied volatility, that has to be taken into account during the test phase because your strategy might work fantastic in one market environment and then not so great in the next market environment. So being flexible and understanding that the market is a living, breathing entity that is constantly evolving and constantly changing. So all of that does have to be taken into account when you're conducting your test over time.
Yeah.
So, but yeah, absolutely, man, I completely agree with you. So yeah, I would say that in my personal opinion, that really is mistake number one, not having a clear set of rules that you move forward with in your testing, but also your implementation of the strategy itself. All right, so let's move on to mistake number two. Now, to me, mistake number two, I'm just going to call it the ignoring the importance of risk management, and this is such a key one.
Oh
Um,
yeah.
I was actually going back and forth about which one should I make number one and make number two. Ignoring risk management is such a huge part of the mistakes that newer traders make. It is such a foundational aspect of your trade that it's too bad that it's often ignored by a lot of experts or gurus on the internet. Would you agree?
Oh, absolutely. And I mean that this I ties in so much to the first rule that we were talking about. If you don't have proper risk management and you don't have a set plan as how you're going to manage your risk,
Hmm.
you can't. I mean, how can you be successful? You may have a nice
Yep.
little streak of wins here and there, but then without proper risk management, it's going to be one trade that wipes out the past 10 winners,
Right.
you know?
Absolutely.
So, I mean, yeah, yeah. I, I agree. It's hard to say which one is, the top of the list because risk management, I mean, yeah, you got to have it. If you don't have
Absolutely.
it, you are set to fail at trading.
Obviously, I have a very rules based approach to risk management in the day trade room, and you have a very rules based approach to risk
Oh yeah.
management in the swing trade room. So another portion of the management plan is how to take profit, but the risk management is certainly the foundation of it. For instance, obviously in the day trade room, we trade same day expiration options. If you're an options trader, you might not be used to trading with stops, but coming into same day expiration or zero DTE expiration, you should always have a stop. I know you might not be used to it with options because you typically options traders trade longer terms than same day. But if you're same day expiration, you really should be trading with stops at all times. And that's part of my guidelines that we discuss and teach in the day trade room. I know it's a little bit different with you as well in the swing trade room. Is that correct?
Yeah, but I mean, it still falls into the same category
Hmm.
of risk management and
Yep.
having those definitive stops there.
Yep.
We don't use a lot of stops
Right.
in our swing trade room.
Right.
But that's because when we set up these trades, we have a defined risk. So
Correct.
when we take a trade, we know we have X amount of dollars that we can lose on this trade, and
Hmm.
our stop is max loss.
Yep.
So we take a trade knowing that our worst case scenario is losing everything on that trade, and we size appropriately
Yes.
based on that.
Yes.
That way we don't
Absolutely.
have to put some stop out there.
Right. It's just
Losing.
it's two different. It's they're both risk management profiles or both risk management plans, but they're tailored to the specific strategy that's being
Yep.
utilized or being
Yep.
conducted at that time. And obviously, they've been working fantastic, and we'll continue to evolve and continue to adjust again as the market does. But yes, I mean, we've changed our risk management profile even just in the day trade room over the last couple months, just because, like I said, a lot of changes in the market. For instance, we've actually even in the zero DTE trades that we typically conduct, We tightened up our stop a little bit because we've been taking profit a lot faster, and we didn't want to have that expanded risk reward ratio. So we tightened things up. So we're taking profit faster, so that we're tightening up our stops, and that's just one adjustment we had made a while ago. And then obviously with the introduction of the iron butterfly strategy that we use, which has been going fantastic. Uh, we have a risk management strategy that includes debit spreads now, and which is fantastically working. We've worked out the kinks with it, and I'm very happy with the results so far. What bothers me, I guess, is when I see newer traders learn a strategy, an entry strategy, and they're so focused on the entry strategy, but they never learn the management strategy. And
Yeah.
that's, to
And
me, that's
I
the
think
more
it's
important part.
backwards. Yeah,
Right,
I think
exactly. That is
it's
backwards.
backwards. But before
Absolutely.
you ever learn how to take a trade, you need to learn how to stop yourself out of a trade.
Yes, how to exit.
Yeah,
Absolutely.
how to
It's the
exit that
most important
trade.
part.
But before you even enter, you need to know what your stop on that trade is going to be
Yes.
in one way or another. And like you were saying, I mean, there's all different forms of risk management when it comes to managing your trades based on style, based on whatever the
Right.
trading style is. But yet, I mean, that is more important than the entry any
I
day.
100% agree. Before you hit confirm and send, you should know how you're going to exit that trade. Whether that
Exactly.
exit is going to be a roll, a stop, a take profit, um another position, an opposing position, or an adjusting position. You should know that before you actually enter the trade. So
Exactly.
I love that one. I could literally talk about this mistake
Yeah.
all day. Um, but let's move on. So now we're going to get into again, this was kind of hard to only narrow it down to 5 big mistakes, but I am going to talk about what I perceive to be mistake number 3, and that's overlooking time decay or theta decay. Um, this was this one's actually an important one because what I find is a lot of newer options traders, they know the mechanics of getting into the trade. They know the mechanics of even getting out of the trade, which is fantastic. The mechanics of utilizing your platform is very important. And
If
when
you're going to learn any Greek, this is the one.
yes,
It's that if you're going to pick one to learn, this is the one that
this should
has
be
to
the
be
first
learned.
one. Yes, I
Yeah.
agree. Absolutely. And we're not going to the purpose of this discussion isn't to sit here and teach about theta. We have other classes that we teach where we break down each of the option Greeks. But so we're not going to sit here and discuss how theta works or why it does what it does because that would just take too long. But I will say this: if you don't know how theta affects a debit spread or how theta affects a short iron fly or a long call or a long
Yeah.
put, if you're not really sure how theta is actually affecting those specific entries, I'm really going to highly encourage you to one, leave a comment down below or reach out to us at support@downtotrade.com. It, believe me, we're here to educate. That's our passion. That's what we do. We want to teach as many people as much as they can learn. And theta is an important one. Theta,
Yeah.
as you know, is just it's the concept of value decaying away from the option contract as time moves on. I mean, that's essentially what theta decay really is. Um,
I mean,
but
I'll kind of sum it up in like kind of what you're saying of if you are trading options and you're buying calls or you're buying puts or you're buying debit spreads and you can't figure out why you're not really making money on these things or you're losing regularly, even though the trade seems to be going in your direction, it's because you're getting nailed by theta.
yep,
And that is why it is so important to learn. And that's like one of the biggest, that I think it is the biggest mistake that people make in the actual mechanics of options themselves
yes,
is not calculating and understanding what theta is going to do to their trade.
correct, correct, absolutely. And again, we have videos where we discuss theta quite in quite detail, but we'll just have to move on the for this discussion. we're
Yeah,
gonna
I could
move
go on for
right
hours.
on to one that, in my opinion, is m- is less understood than theta. I think there are quite a number of newer traders who do understand theta. They might not fully grasp how it affects their specific trade, but they have a general idea of how theta works. But mistake number four is a factor that I don't think enough traders really understand, or they don't take into account as much as they should, and that's implied volatility. I think
Yeah.
implied volatility, or IV, essentially it's the market's forecast of the likely movement in a stock price. That's essentially what implied volatility really is. But not understanding how that IV, or how that increase or decrease in implied volatility can affect premium on your contract, or premium in your option contract, can be devastating to your portfolio. Would you
Huge. I
agree?
mean, this is, I mean, one of my biggest rules that you know in the swing trade room.
Mm. Yeah.
IV determines how we're going to take a trade.
Yes.
IV tells us, are we going to do a credit spread, or are we going to do a debit spread?
Yeah.
That is how we decide this, because I mean, IV, like you said, it's the second most important after understanding theta. You've got to understand implied volatility and
Yes.
its effect on everything.
Right.
So
Well, because
yeah,
the three main things that affect premium is going to be obviously the price of the underlying asset. Second is going to be theta decay, and third is going to be implied volatility. I mean, those are
yep,
the three major things in the Black-Scholes model that actually predict the premium of the contract. So yeah, having a thorough understanding of these factors and how they can actually move premium up or down, or sometimes hold premium completely flat, even though
yeah,
price is going in your direction, and it gets really frustrating to watch. And if you don't understand how, or understand why that's happening, it could be completely frustrating as a newer trader.
yeah, yeah. Well, I mean, we saw it today in the day trade room.
Yes, we did.
I mean, it
Yeah,
was
we
a
sure
perfect
did.
example of it.
Yep.
But no, absolutely. I mean, it's why it's such a big factor in, you know, for swing trades and in our swing trade room, of why we take it into account on every trade. Because if you're not looking at IV before you enter a trade, you have no you have no idea what the expansion or contraction of IV is going to do that trade, and you
Hmm.
can get crushed by it.
Absolutely.
You know,
Absolutely.
I mean, I know a lot of people have heard of IV crush, but they don't necessarily fully understand it. But
Right.
that's exactly what it is.
Yeah,
I
absolutely.
mean, perfect example is our ARM trade.
Hmm.
You know, where we took a
Oh
trade
yeah.
on ARM when it had exploded out on earnings, and it was at an IV. I mean, that IV rank was what, 216 when we
70.
got
Oh, yeah,
in.
yeah. Okay, yeah, exactly.
I
260.
mean, it
It
it was
doesn't get it better
insane.
than that.
Yeah, so we absolutely knew that, hey, this thing looks like it's going to keep going higher, but you don't want a debit spread when you do that, because the
Not at all.
IV expansion is not going to work in your benefit.
Right.
So we sold a bunch of credit against the thing, and we were out in what, 2 days?
Yeah, we took advantage of that IV crush, or IV contraction.
Yep.
And again, like you said, who cares what price is going to do?
Yeah.
That was purely an IV position.
Yeah, and that's
And
exactly it.
I mean,
And I
we
mean,
took profit in a day and a half, I think, something
yeah,
like that.
yeah, it was like a day and a half we took profit on that thing, and the next day it even pulled back on the next day, and because of the contraction of IV, we were never losing on the trade.
Yeah, I know it. It
It
was
was
unreal.
beautiful.
So when you see one like that, you got to jump on it, and obviously that's why we love having Varian as part of Down to Trade, because he's constantly looking and scanning and finding those diamonds in the rough, if you will. So I love having that as part of our thing. But yes, implied volatility, I would agree with you, Varian. It should probably be the second element after theta decay. The IV really should be the second element you should focus your attention on, and your education on. And
Yeah.
certainly, so for those of you who don't know, I teach we have a jumpstart program where, and the idea of the jumpstart program is to take a new trader, someone who's never traded options before, take a new trader and teach them all the basics and intermediate and even a little bit of advanced concepts of options trading, and to take them to where they're confident and comfortable enough to begin trading option strategies. And it's been a very, very, very successful program. The Jumpstart program is now going to have a set number of students, so it's not going to be one-on-one anymore. It was just taking up too much of my time. I had too many students at one time to be able to do that. So we're going to do it in a group class, group setting, all online, of course. And this is stuff that we cover nonstop is theta decay and implied volatility. I make sure we do our best to make sure that you really grasp all of these concepts. These two things really should be at the core of your options education, in my personal opinion.
Yeah, absolutely. And the awesome part about the mentorship that you're doing, the classes, it's a small group. It's not a
Yeah,
whole ton of people,
yeah, it is a small
and
group.
everybody gets opportunity to ask questions.
Yep.
There's a lot of interaction between everybody. So, it's one of the best parts about our community is, even for you and I, we're constantly, gaining so much from our own members that are throwing
Yeah.
ideas out there. And they're like,
Yeah.
hey, what about this? And we're like, "Hey, that's not a bad idea. Let's
Not a
look
bad
into it."
idea.
And, so we do some research on it. So
It's
it's
true.
an awesome part of the community that, even in these mentorships, you're with a group, it's a small group. You get to know the other traders in there and build relationships, not just with them, but with you, and being able to ask questions and get a lot of that attention and everything that you
Absolutely.
would want. So, I mean, it's awesome. It's great the way those mentorships work.
Oh, I completely agree. Absolutely agree. So, anyways, yeah, let's so that would be again, I struggle to find the right order for these mistakes. Let's just say that these five mistakes are what we might say are the biggest five mistakes, not in any particular order. So let's
Yeah.
just go that route. So, anyways, the fifth one, um, this one kind of in my mind touches on something that we talked about earlier with mistake number one. So, but mistake number five is neglecting to continuously educate yourself. And I think this is a big part, or a big part of this actually is something that we've already discussed, and that's being willing to adjust your strategy and your outlook and to the market that you're currently in, and that actually does take a lot of um, you know, continuous education, right?
Oh yeah.
Varian, you and I continuously are back testing. Where
Yeah.
we're constantly looking to refine our strategy based on what's going on right now, right?
Yeah. Oh, absolutely. Yeah.
Yep.
I mean,
So I think back testing is a big part of this. Wouldn't you agree?
oh yeah, for sure. I mean, yeah, if you come up with a trading plan and you just start jumping out there and start doing it without going back and back testing it, I mean, it just it doesn't make sense.
You can do it, but
You can,
it's
but I
slow
mean,
going. It's slow going.
with all the technology that we have, all of the platforms that are out there, I mean, even just, you know, trading view, things like that have the ability for you to go back. Toss
Mhm.
has the ability for you to, do replays. Going back and getting experience at testing out that strategy is just so vital. You have to be back testing this stuff
Absolutely.
to even see if it makes sense to put into the real world.
Hmm. Well, and also how many I couldn't even imagine how many hours you and I have spent back trading as well. Like you
Oh
said,
my
using
gosh.
historical trading view. Like
Yeah.
I used to do that till 3 o'clock in the morning and just practicing. Okay, let's work on AMD, and it was
Yeah.
just we would sit there and go back 3 months and just hit play. And we learned a lot doing that stuff by focusing on whatever aspect of trading we just happened to be focusing on at that time. But yeah, so back testing and back trading are two huge elements of, again, what I would call continued education. So I love that. Okay, so yeah, those are again the big five for me. Have a plan, stick to your plan. Two, um, have a risk management portion of your plan. It's extremely important. Three, understand how theta decay affects your trade. Four, understand how implied volatility affects your trade. And five, Never stop learning. Don't step away from the market. Don't quit. Don't give up. Don't get down. Look, I'm not saying that you need to keep if you're having a rough time and you just can't quite break through that profit ceiling, not a big deal. Go to paper trading. Do something, but stay in the trading market. Don't give up. Because if you give up, you will never become successful in it. You've got to stick with it. And if you're struggling with it, not a big deal. Give us a holler, contact us over at Down to Trade. Believe me, that's what we're here for. We're here to see you find success in whichever journey you want to go down. So, all right. I've again, there's so many other mistakes I wanted to talk about, but I just narrowed it down to those five. So
Yeah, this could be a 10-hour video easy.
yeah, it could. We'll tell you what. If you don't mind, let's jump right into your back test.
Yeah, absolutely.
Okay. Now, while he's getting that pulled up, let me go ahead and just say, so the software that we use for back testing is Option Omega. And Option Omega is I've seen a lot of uh, back testing software out there, and I've got to say, Option Omega is by far my favorite. It is the most powerful back test software that I've personally tested. I used to have to test, my a single test might take me a month only because it would require analyzing data via spreadsheet, and via coding a spreadsheet. But with Option Omega, it just went so much faster and easier for us. And so, Varian, you got your oh, I need to.
Yep, just need the screen.
All right, here we go.
All right. So here you can see my Options Omega, and I'm actually going to delve into your world a bit, Amit, of day trading.
Okay, let's do it.
Yeah,
I'll
so
take some notes then.
yeah. um, so what I did here is this is a trade on the SPX using 0 DTE. And the concept of this is how to take advantage of a gap up on the market. And as we know, the gaps on the SPX are not generally very big. They tend to stay pretty level, but occasionally, like this week, we saw a pretty big gap down.
Mhm.
Well, in this back test, what I wanted to do is see how could we take advantage of some gap ups on the SPX. So here you can see this is for this trade, it is an opening range breakout trade. So the trade would open between 9:46 a.m. and 1 p.m. That would be determined based on a breakout bullish of the opening range. And the opening range is the first 15 minutes. So this trade is available daily. So anytime that we have, and you can see here, gap up minimum of 0.5%. So again, big gaps on the SPX are not normal. So that 1% plus gap down that we had is not something that is super common.
Right.
So this was really designed to find some more, trades that are available, but on a pretty decent gap. So this is based on a 0.5% gap. So if the SPX gaps up 0.5%, doesn't make a difference if it's Monday or, through Friday, any of those days available. I did run this just based on one contract because I just like to see what that one contract hit on any of these trades would be, because then you size accordingly based on your account. But so the concept is if it gaps up 0.5%, you are going to take an opening range breakout. So opening range is till 9:45. So
Does it
starting at
have to be in the direction of the gap?
yes. So
Okay,
this is a half a percent gap up, and you would only be taking this trade bullish.
got it.
So on a bullish breakout of the opening range, and the opening range would be the first 15 minutes. So if it breaks out of the opening range, doesn't make a difference if it's between 9:46 and 1 p.m., you would enter a 12 delta put credit spread, and it would be 20 wide using 0 DTE. Now, part of the setup on this, because a lot of things that, you know, a lot of traders are looking for that is kind of a struggle when it comes to selling credit. And you know, this is that when we're selling credit, we lots of times have to put a pretty big stop out there because of the fluctuations.
Hmm.
So what I was specifically looking for was more of a selling credit in momentum type of trade.
Got it. You're
So
gonna have tighter stop.
you're going to have a tighter stop, but as you're very familiar with, how often do we actually set up a 2-to-1 reward to risk? So
On
we
a
are
credit spread?
yeah, on a credit spread.
Yeah.
We're risking 1 to make 2.
Yep. That's great. That's
Yeah.
fantastic.
So not something that happens very often when you're selling
I
credit, but
can't
that's
remember the
what
last time we've had that set up. I mean,
exactly.
sincerely.
So that is the way this is set up. You have a 25% stop loss. You're going for a 50% target.
Wow.
So you're getting that 2-to-1 reward to risk on this trade. And the big key to remember is whenever you do a 2-to-1 reward to risk, your win percentage drops drastically. So we tend to average what, 80%-ish, we'll just say around there
Yeah,
for
80
most
to
of,
90. Yeah,
yeah,
typically.
that when it comes to selling credit. Well, by having these tight stops
Yeah.
and tighter targets, the win rate goes to 56%.
Yep.
But the thing to remember, when you have a 2-to-1 reward to risk, you technically only need to win on 1/3 of your trades to break even.
Yep. The expected return is still extremely positive.
Yeah. So anyways, that's the concept behind this. It has a 56% win rate.
Yeah.
Over the back test period, which on this was based on May 16th to February 14th of this year. I did it based on when the everyday expirations started happening on SPX.
Got it. Okay. Fair enough.
So I did it based on that period right there, just trading one contract each time this scenario happened of a 0.5% gap up, and then you take the breakout. And you can see it had a 56% win rate. Your P&L is $580. And this is based on just one contract.
Yes. Okay.
So you can see the average winner is $67 a lot, and the average loser is $45 a lot,
Yep.
with a max winner at 95 and a max loser at 65. So
Got it.
your wins are always bigger than your losses. So that makes a lower win percentage much more acceptable.
100%. 100% agree. And that's one of the algorithms we teach is how to calculate your expected return. And this certainly would have a really nice positive expected return. Now, obviously, this is only for one contract. This is the smallest position possible, but it's extremely scalable. And that's fantastic, man. I love it. I
Yeah.
absolutely love it.
And you can see, I mean, since May of 2022, this trade only occurred 32 times.
Yeah.
So it's not something that happens a lot.
Right.
But it happens enough that if you see this situation occur based on the statistics, you got a pretty decent chance at having a winner on that trade.
I love it. Absolutely love it. Okay, cool, man. I love it. Let's yeah, you know what? I'm gonna take some notes, set it aside, and see if we can't look for one. That'd be fun.
Yep.
I
Sounds
mean,
good,
you never
man.
know. All right. Okay, well, I think that's gonna wrap it up for us. This has been an awesome time. Again, if you have any questions, first off, if you have any questions about Option Omega, what Varian was just showing the software that he used for his back testing. It is actually a really good program. I'll leave a link. I have an affiliate link. I'll leave it in the description below. That affiliate link will actually get you a 50% discount for the first year subscription. So other than that, if you have any questions, again, reach out to us at support@down2trade.com or just visit us at down2trade.com. That's down the number 2trade.com. Always leave a comment down below. Don't forget to like and subscribe. We love hearing from you. So, Varian, do you have anything else?
No, that's it. I'm just looking forward to getting down to trade with everybody.
All right, sounds good, buddy. All right, everybody, take care. Happy trading.